Morning, everyone. We'll kick off. It's a tough morning to kick off, but we'll try to do our best. So the purpose of this presentation is to give a brief overview of what's happening with open banking across the world. It might become relevant for some people in US a little bit more in the next 12 to 18 months. And hopefully that helps for people that are involved in other jurisdictions. That could be just a collection of interesting facts. I'll do a quick intro, who we are. Start with myself. My name is Dima, and I've been involved with a couple of large implementations of open banking in Australia. And I've also been involved with open standards supporting open banking implementations across the world via OpenID Foundation and other industry bodies. Ralph?
Good morning, everyone. And again, thank you very much for showing up, particularly to the Australian contingent, who I know were out till very early in the morning. So very much appreciated for your appearance here today. My name's Ralph Bragg. I'm the CTO of Raidiam. I'm also Australian, but I wasn't out till 2 a.m. I've been involved in open banking implementations from the UK, Brazil, open banking, Brazil, open insurance, various implementations around the Middle East, as well as Connect ID and the CDR. Raidiam's a small consultancy. We provide a lot of the infrastructure and the technology services that sit behind a lot of these ecosystems that actually enable these federations to be brought to life quickly. And yeah, I'm privileged to be here today.
I think one of the main points of this presentation for us is that open banking is a truly global movement. It's best illustrated by looking at the map. And as you can see, majority of the world is covered by some implementations of open banking. And if we had to predict in a few years' time, most of this, maybe not Antarctica, but most of this map will be blue in one way or another. Open banking kicked off with UK implementation in 2018, 17. And later on, Australia gone live in 2020, Brazil in 2021, and it's slowly rolled out across the world and being rolled out, like here in the United States and in Canada. There are different implementations, which we'll go through a little bit. Anything else you want to add?
So some of the hotspots, as you're aware, is there's a lot of interest in the US now that's kicked off, and also in Canada, which is still waiting, or is waiting for Abraham, the open banking implementation entity lead there, to publish his final report to sort of set out the outline of what they're going to do in Canada. But all signs from the market do suggest that they're going to copy the same or a similar approach from a technical design that's been done in the UK, has been done in Brazil to great effect. Other areas that have in the process of now going to market and going to RFP for some of the implementation services include the UAE, which has been a fast follower from SAMA. So to IAM vendors in the room, expect the Middle East region to really hot up in terms of number of clients, number of banks that are all going to need implementation support, as well as identity vendors to make sure that they meet their requirements from a data out point of view so that they can actually partake in open banking. In Latin America, you continue to see now a lot of the other regions have woken up. So Colombia, likewise, has published some of the first steps into their implementation program. There's engagements running with the Central Bank of Colombia and a few other different regulators down there, because they're all, to a greater or lesser extent, admiring what has gone on in Brazil and the speed that Brazil has revolutionized their economy, both from a data and API perspective, but as well as mobile phones and the support that and the enablement that the ubiquitous PIX, so faster payment system powered by mobiles, have really turbocharged some of their more transformational initiatives. And all countries in Latin America are looking to implement their own programs. The great thing about Latin America, though, is that there's the first rumblings of talks about open banking across the entire region, which should really sort of help drive consistency of standards and implementations, as well as potentially regulatory harmony in terms of the types of services, how they're credited and on board, which will really turbocharge the ability for fintechs to bring services and propositions to market across the entire LATAM region. And yeah, we've already mentioned Canada. We'll just wait and see.
Jurisdictions that we mentioned already gone live with open banking, they are looking at the ways to expand the regime to open data, open finance, payments. Australia is one of the regions that have started with a read-only regime. Essentially, the purpose of Australian CDR, consumer data right, was to expose all customer data initially. Now we realized, even if it was obvious from the very beginning, that payments is an essential functionality that is required for open banking, or right in general, as we call it. And Australia is heading slowly towards implementation of payments as well. Australia also expanded already to energy. On the way to open data, now we have open energy. Energy providers in Australia also mandated to expose customer data to third parties with customer consent. The next step for Australia is also telco. So in September or November this year, largest telcos in Australia will have to expose customer data as well. Brazil is heading towards open finance by implementing open insurance shortly.
That's live.
It's already live. Here you go. Next.
So some of the key numbers, and we go through a little. You'll see some of the comparisons with some of the different markets we're talking about. So for Brazil, 8 million active customers. Yes, they have a larger population base, but they've done this in about 20% of the time as it took the UK to get to the same measure. 825 million API calls a week between participants, running at about several billion. API calls a month, and the big one for me is the number of brands. Now, this is a whole of market financial services industry. Every bank is compelled to participate, and of those 184 providers of data, 164 of them support open banking initiated payments. So that's implementation of open data, customer data, and then also read-write functionality in the form of payments, which they're able to do in about 18 months. Now, in addition, of those 184 authorization servers, the more than 85% of those have a consistent, always available, provable, demonstrable, available API and authorization server. So if you hit any one of those banks, there's a very high conformance and certification route. It does just work. And one of the key things with Brazil is by having a very active regulator who is very insistent on consistent implementation of open standards across the entire financial services user space, you can end up with a great platform for fintechs to be able to bring services easily across a whole of market. I know Joseph's going to be talking about some of the other ecosystems later on today, but that's not something that you see in all of these other jurisdictions. They've either got less scope, long tail problems, or they just don't have that same sort of drive to a consistent implementation across all of their ecosystem.
Australia doesn't have as many numbers available to us to compare. It's definitely been longer than Brazil in terms of implementation runtime. The government is not too transparent in terms of the stats, and one of the reasons for it is extremely low adoption. I'll just go back to the previous slide. Brazil, 825 million weekly calls, and I hate measuring it in API calls, but Australia shows 14 million calls. That just gives you the scale or lack of scale in Australia. We don't know how many users. The anecdotal evidence shows that it's very low adoption, and we'll probably go a little bit why in later slides and later presentations. The number of data holder brands, which is our banks and energy providers, 113 at the moment, which is relatively comparable to what Brazil has. And one of the reasons clearly stands out here for me is it's a read-only regime. There is not much you can do apart from getting the data out.
And coming all the way back to where are we in the UK? So 7 million customers. Now that's a higher percentage point in terms of overall customer penetration than say Brazil, but it's actually a smaller number overall, and the number of API calls is, in terms of interactions, is much lower. Now, API calls are, there's debate over how useful that is from an actual adoption rate. For example, a data recipient could be hitting the same person's API 10 times a day in Brazil, or they could be hitting it 2 times a day in the UK to sort of counter for some of those numbers. But generally, the UK's has recently had a new a new set of directions published by JROC, which is the Joint Regulatory Oversight Committee, which is trying to give open banking a bit more of a shot in the arm, because for the last couple of years it's become a little bit staid and a little bit stagnant. Some of the other challenges that are facing the UK is that they've got significant API coverage, but they don't have complete market penetration. So if you're trying to use open banking services consistently, you've pretty much got 15 banks, but there's hundreds of banks in the UK that have some form of open banking, but it's just not really available to consumers because it's using different standards or it doesn't particularly work particularly well. So what we're looking for in the UK is a little bit more of a shot in the arm to sort of make sure that it continues to evolve, it continues to grow, and potentially into other sectors. So there's moves afoot to look at expanding the implementation of open banking in the UK across other verticals, across other services, in the payments industry. And there is a big push in terms of smart data to look at how do we take open banking or some of those concepts into other sectors like energy in particular, where there is a couple of pilot programs running, but they're very, very early days. One of the key things for both the UK and Brazil is that support for payments, the ability to analyse somebody's information and then offer them a value exchange for some sort of monetary fee, and that has really recently with the introduction of sweeping and what are called variable recurring payments, so the ability to make multiple payments or set up a payment mandate to essentially replace things like card on file, you're starting to see some rather interesting use cases emerge. What you've needed with those use cases, though, is a liability framework. And that's something that's never really been envisaged right from the beginning with these data sharing initiatives. It's data, it's my information. But if you're going to empower someone to act on your behalf in certain use cases, particularly when you're moving money and you want to get into open banking delivered payments, you need that liability framework for anything more than a single immediate payment. And that's been one of the real points of contention, because obviously fintechs, they want that for free, but they don't want the liability. Banks are more than happy to give it away, provided there's a liability shift. And this is where you're starting to look at some of these potential creations of open banking payment scheme rules, a la some of the scheme rules like BACS, CHAPS, faster payments, or even conceptually something like a Visa or MasterCard. So yeah, the UK continues to grow, but not quite at the same pace as some of these other markets, and we're waiting for some clear sort of regulatory changes off the back of regulatory signposting that changes will be coming.
As we review different implementations, we start noticing naturally different patterns and differences and commonalities between different jurisdictions. You look at different ecosystems, you'll see that some of them are government-driven, some of them are private sector-driven. For example, you can say that in the US we have FDX, and FDX is a privately driven or commercial sector-driven open banking ecosystem, but it doesn't get significant adoption or coverage. My personal view is that, especially in open banking space, it has to be government mandated, at least on the supply side, to make sure that there is enough coverage. And we can see the differences where in UK it's a partial mandate. Not every bank, and it creates problems for adoption. In Brazil it's a complete mandate. In Australia it's complete mandate. All banks, all authorized deposit institutions in Australia have to participate, don't have a choice, with heavy fines if you don't. And that impacts the coverage. We've touched on read versus write. Once again, it's absolutely important to have the depth of the functionality to be able to make it useful for third parties to actually onboard to the regime. Touched on banking versus other sectors, energy, telcos, And one day I hope government will also participate in open data regimes. Different levels of support of intermediaries, and that's majority of open banking implementations, as we'll touch on a little bit later, are peer-to-peer. There is a direct connectivity between a third party and the bank or the data provider. But there are some models, especially in FDX, where they cater for intermediaries as well, due to the structure of their market. And there is a different level of standardization of APIs, which we once again will touch on later. Certification is another one interesting that we'll probably touch on slightly later, and Joseph will cover later in his presentation. It's clearly that different jurisdictions make different choices, and it impact the quality of their regime. I'll probably stop on that for now. It's very hard to measure adoption. I think the easiest measure to elaborate on is API calls, but to be honest, I don't put much value on it. You can generate a lot of API calls with no value, and we've seen that in Australia with generating lots of API calls, but very small number of use cases, and still not as much as Brazil or UK. But it can be used as a proxy. You can have a look at number of participants, you can have a look at number of active users, but a lot of it really comes down to how many new third parties coming along to the regime, how many new use cases actually being useful for customers. And I normally just ask around, and the question that I ask people, what do you use open banking yourself for? And I am part of open banking community. A lot of people are doing it for testing, for curiosity, but the key question is that how many real use cases in your real life for your financial purposes I use open banking for? I can answer it for Australia. It is not much. I don't know if you can comment on UK or Brazil.
Yeah, so the number one use cases we're starting to see is with that introduction of payments and the ability for VRP, is we're seeing the use cases in the SME space explode. So it's not the retail space. The retail, everyone's roughly got the same needs, but actually corporates and corporate banks have been pretty good at tailoring financial products and bundles of services for SME use cases. And so the SME use cases, particularly in the UK, are going through the roof. Everything from credit risk decisioning, payroll assistance, obviously your basic ones for accountancy, then correspondingly the ability to automate using open banking payments, payroll, replacing traditional BACS type payroll implementations. There's a huge number of implementations. A lot of the more specialist financial providers are also integrating with open banking, some of your FX players. So for example, actually all of the FX shops will allow you to set up an FX mandate and they'll just pull the cash straight from your primary bank account that you've given that delegated access to, so without going through any of the payment rails, and it's an immediate bank transfer, which just lowers the fees and the costs for everyone. And that's what, in some cases, you're starting to see those fees and cost reductions actually being passed on to consumers and businesses, with a net actual reduction in the overall cost for doing services to those suppliers, which has also been great to see. It hasn't just been used as I can lower my costs for me as a bank. It's actually for quite a lot of those suppliers, if they can lower those costs, they're using those for competitive advantage to then pass those costs on to onto consumers. And so if you look at some of the the use cases, this is a great little website from Bank, they continue to grow, and the number of providers that continue to play in these spaces continue to grow. But a lot of them, as you can start seeing, they're business, commercial business, and when traditionally with open banking it was very much targeting personal finance management, personal access to data, personal. So it's been interesting to watch how this ecosystem has used the potential for open banking and has actually then developed these propositions, because it wasn't really at the start. No one knew where or what or how could be developed, and that's a really big thing for regulators and people implementing these ecosystems to understand, is that, you know, you might want to see 3 or 4 different types of use cases that have been declared, but actually it might be the 10 or 20 for a different customer segment or a different sort of use case that actually results in that value and that adoption.
So another thing that we notice, looking at multiple jurisdictions, that there are certain common themes in terms of how you build. On this diagram, you'll see essentially key building blocks that you need to implement open banking. And in the interest of time, I know we're almost running out. The next slide shows that there is a level of standardization that's slowly increasing, and we can tell that every new ecosystem that's being introduced uses more standards, more common building blocks. Some of the areas, like in identity, OpenID Connect is fairly standardized, and most of the ecosystem adopted with no issues at all. Security profile is dominated by FAPI in most of the jurisdictions. The area that hasn't been standardized at all or very little is API specifications. And trust management. So these are the areas where we see that in the next few years the level of standardization will increase. Few of us here working in the FAPI working group in OpenID Foundation, Brian, Joseph, Ralph, myself. We can also see that slowly we cover more and more building blocks: security profile, identity, ecosystem, trust management profile, trying to provide the framework for those ecosystems to adopt open banking as quick as possible in the easiest way. And this slide here is to demonstrate actually, to just touch on point why we're talking about open banking in identity conference. Typically the identity people, they're kind of involved in this bottom area, which looks after security profile, API security, identity, and ecosystem trust management. That's why we keep talking about it here.
Yeah, so common key success factors. Joseph's going to go through these. Like, it's the same slides we've been, and content and messaging we've been talking about for the last 3 years. Standards are key. Automated certification and conformance testing. The ecosystems that succeed have some sort of payment initiation, some sort of way of, after determining if there is value, actually executing on that value. There is a consistency of or starting to emerge, just a general pattern in terms of how these ecosystems are being built, but a big focus increasingly now is on overall lowering the cost of these ecosystems to coming to market. And that means there's increasingly a willingness and appetite to tightly profile and put a little bit more of a burden on the banks to massively drop the implementation challenges for those same banks when they're trying to act as data consumers. And so you no longer are seeing that same sort of fight between banks saying, I've got to be a data provider, and that's all I want to be. Most banks are now coming to these ecosystems with the recognition of what's happened before, is that they are going to be both a data provider and a data consumer. And actually the competitive advantages for them are actually on the data consumer side, so it's better that they make sure that their own data out works, so they can go and run around and talk to all of their peers to make sure that everybody else's data out size work, because they are really interested in those data in use cases. So how can they consume information about their customers that are held in other locations? What's coming up next, just in the interest of time? Look, these are the five key pillars. So convergence of standards. Those profiles are shrinking. The optionality is shrinking, which means that the ease of implementation for all parties is continuing to shrink. You're now seeing the emergence of libraries and SDKs that enable some of the base functionalities that just make it really, really simple for fintechs to rock up to an ecosystem, plug in, and go. And that's particularly in the case of some of the new moves in Australia, a really, really, really big enabler. The global rollout will continue. We've seen on the maps, it's not stopping anytime soon. But there are some specialized, vendors that have emerged onto the market that are trying to make this easier for these implementations wherever they go. Yes, your traditional full stack SIAM players are still heavily involved in the larger banks, but there are some specific and specialist, I will just do your compliance piece for some of those banks. Now, whether or not that's the best strategic decision for the bank to be making, you can't fault those vendors have emerged, and they are doing some implementations at very low price points. So again, one of the challenges has always been it's too expensive. implementation costs are coming down with the emergence of those vendors. Beyond banking, well, CDRs are already a whole of market. We've already gone into open insurance. We've already seeing that move laterally as well as across, into other jurisdictions. And the interesting one for Dima and I is we're now starting to see people coming to and ask us, so I've got open banking, I've got open finance. How do I make them work together? But I still want to maintain that segregated control. How do I make Australia interact with the UK? Can I, as a UK an Australian bank, accept an identity or information that's asserted by a UK ecosystem? How do we technically make that possible, seamless, safe, secure, so that open banking can really go beyond borders?
That's right. And if you want to know more about open banking beyond borders, because that's where we potentially see the trend going next, cross-border connectivity, is a white paper that we published on via OpenID Foundation, touching on that. It touches on the history of open banking, but it also goes into potential options of how cross-border can work. I think we're out of time. Any questions?
So, being involved in some of the implementations, we showed from the UK with the loading partner, do you see that fragmentation of the loading system as just evolution and actually a good thing or a risk?
So the question was, do we see the implementation or the fragmentation of some of these ecosystems as a good thing, or a risk? So it's a great question. Standards, and it's covered a lot more in that paper actually. There's three core layers you can put your standards into. You've got your security standard, which also covers your onboarding and accreditation process. Well, we're seeing that rapidly consolidate onto very specific implementations or profile of FAPI1, which is almost the same as FAPI2, and that's looking like what Brazil is going to do. They're going to force, and they're massively going to rapidly profile FAPI1 to get it to like 95% of what FAPI2 is. Newer ecosystems are going straight to FAPI2, which is already a massively reduced profile. So when you say fragmentation, yeah, the guys that went first, they had wide choices. But what you're seeing is a further narrowing, and for the most part, the banks that have narrowed their profile are still compatible with the wider, the wider ecosystems. But so I wouldn't really call the security profile sort of fragmenting. Consent is one, the lodging intent pattern versus RA, and this is where you do see some fragmentation, but it's more tightly aligned to some of the regulatory rules, some of the actual frameworks that are governing. How long can you share data for who, for what purpose? Do you have to share purpose? Do you not have to share purpose? Do you have GDPR underpinning or not, an overarching privacy legislation underpinning all these? And so when you get to the consent piece, there are some different principles that have to go into the design of that payload. The RA specification, so the rich authorization request specification, has now made RFC. Congratulations to the IETF and Torsten and everybody else that did that. But that still only provides a framework. What goes into that framework is still going to be jurisdiction specific. And then finally, when you get to the API specifications, personally, I just don't see, despite ISO 22022 or 20022 or FDX or other standards body, that ever getting to the ever level, complete consolidation and alignment. But I also don't think that matters. For a fintech and an ecosystem, if you've got a slight difference in a functional specification, it's a small delta. The further you go back down that stack, the harder it is to be able to achieve alignment. So one of the goals with the foundations is to really tackle the security and the consent piece. And I don't think we'll ever look at the functional APIs ever in terms of. That we'll see. So RA and grant management is now available. It's going to require another big bold regulator to make that leap. Brazil pushed for FAPI2, they push, and now they're going to push again to push everyone to pushed authorization requests. They're going to consolidate the security profile, but I can't see Brazil doing wholesale changes to their consent model and processes now in market. So the next major standard that gets created might, and this is where we want to be working with the likes of FDX and the likes of these other standards bodies to then get them to iterate their consent profile. So there is a standard that's based on these newer patterns, but none of them are implemented yet particularly widely or at all.
Yes. One of the key messages there is that we've got, I think we know we have a template now, how to do it quickly, how to do it properly. It does require the next evolution, the next regulator to actually pick it up and expand on it. It's a roadmap. Thank you.
Thank you.